A very good evening to traders. Mark here from Daytrading Room, Path to Pro series. Little short video ideas, tips if you like, techniques, tricks if you want to call them that, inspirations, that just little ideas that you can take, integrate into your trading. They are things that have worked for me, little methods that I've picked up over my 13-year career, and I'm just sharing them with you. The idea being that over the whole video series, if you can take maybe 2 or 3 of them, discard the rest, integrate them into your trading, you like them, you make them your own, and it takes you out of losing trader status into making some money. That is job done. That is exactly what we're after. Okay, today I was going to do a video about this, but in actual fact today just cemented it almost perfectly. And what I want to talk about is a really wild day. If you get a chance to have a look at your charts, if you haven't done it, 16th of December. Dow was crazy, oil was crazy, but what has happened is Russian central bank raised interest rates. Who cares? Whatever it is, doesn't matter. The point is, trade what you see on your screen, not what you're reading in the news. Now, those of you know we have some setups based on this. We call it a little bit of unexpected response. But putting all that aside, putting the intricacies of the setups aside, focusing on exactly what you're seeing in front of you is the most important thing when trading a volatile market, not what the news is. Now, Russian central bank raised interest rates 17%, whatever, doesn't really matter. The expected action for the US dollar ruble cross, this specific chart here, is for the price to go lower. Okay, that's the expected action based on the interest rate rise, and that's exactly what we got. However, we then towards the early morning in Europe saw it push back up to the point where it was before the rise. Now this is not a tech stock we're talking, this is a country, we're talking a large country, and they've raised interest rates significantly, and we're now back to the position we were several hours ago before that interest rate announcement. So that is telling you something. You can forget about what you think should happen. You think it should go down, yes, all the textbook will tell you it goes down because of the interest rate announcement, but looking at it and seeing that it's not going down, it's actually going up, and then it starts to break through the highs, and that's really what's causing this really ripping breakout over that prior day's high, because everybody who was hoping for it to move down on that rate is thinking, why is it not happening? And of course that's when you get those parabolic moves. Now, I'm not recommending trading something as volatile as that and across you don't understand, or not necessarily don't understand, but don't trade and don't understand or recognize the intricacies of it. I'm not suggesting that at all. Look at the range on this thing, and the spreads were huge, and but the point is trading something that you see rather than what you think. It happens quite a lot in stocks. We get news coming out, good news, and the stock goes lower. Happens as well in the indices. We might get a Fed decision, we might get a jobs report or something that seems bullish, but then the market sells off, or vice versa. So forget about what's happening, just trade what's in front of you. Be calm, be cool. By all means, look at the headlines if you feel, because it actually, some people say that you should just take them off completely, and in some ways I do recommend that, depending on what you're doing as a trader and the type of trader you are. However, I like to see what the response is, and sometimes I'll have to see if the news is bullish or bearish. Just have a quick look and see what it is. I won't necessarily look at the magnitude of it, but you can tend to get a sentiment of whether the news is good for a stock, a market, a currency, a commodity, whatever, just by feel. The news or reading an article, it will generally say, so you don't have to be an economist to understand it. But then you can look at the price action and say, well, often the most powerful trade is when something happens that's unexpected. And I know we've talked about unexpected response many times in the tape programming, setups program, and all the videos. It's one of my preferred things. But the key takeaway from today is just to trade exactly what you see. Those traders that were selling this and looking for it to completely take out those lows, as you would expect with a massive interest rate rise, with no risk management, have unfortunately been caught out. So don't be one of those traders. If you don't want to trade it, that's fine, but just be aware that these are some of the most powerful trades, and trade what's in front of you at the time. Main thing is stay safe, keep the risk managed, and I shall be back with one of these videos. Hopefully get 2 more in before Christmas. Take care.